This program is brought to you by First National Bank of Botswana.
FNB, how can we help you?
When running a business means
Where did I put that receipt?
we can help you with instant accounting, free software that does your bookkeeping for you. When running a business means
Wait, what do you mean the container hasn't arrived?
we help protect your business from risk with Mohwebi Insurance. And when it means
How do we pay our staff that don't have bank accounts?
we help you make multiple payments directly to people's phones with e-wallet bulk send.
Wow, man.
At FNB, we're constantly innovating to help business owners at every stage of their journey.
Good evening and a warm welcome to First Issues. Thank you ever so much for joining us on the program. First National Bank Botswana is home to over 500,000 customers, serviced at over 24 branches countrywide, making it the largest commercial bank in the country. As one of the leading banks in innovation, the bank has managed to divert 92% of all branch walk-ins to transact online through their digital migration drive. FNB Botswana has managed to increase card usage instead of cash to 45% and increase e-wallet usage by 20%. As we speak, the bank has an astounding 8,100 ATMs countrywide for such services as cash deposits, changing card PIN numbers, cash transfers, and the obvious cash withdrawals. All these were made possible by the just over 1,500 brilliant minds employed at the bank. Among others, the team is led by Chief Executive Officer Stephen Bogatsu and Chief Financial Officer Luke Woodford, who presented the bank's financial results for the year 2018-2019 last week.
I introduced about 3 years ago the strategy that we had focused on, a strategy that hinges on 4 pillars. The first pillar being extraction of value from current. The second one being grabbing from first rand land. What is it that is available within the group that we can bring to Botswana without reinventing the wheel and which is relevant to the Botswana market. The next one being the leveraging of strategic partnerships, where we have introduced a number of partnerships into our ecosystem. I previously mentioned the partnership that we have with the likes of water utilities through the *186#, the partnerships that we have with Botswana's very own innovative initiative that was hatched in 2014. *174#, which we currently have partnerships with various organizations such as Sefalana, such as MultiChoice, enabling you to procure services from these suppliers and using that *174# to pay for those services. We have indicated the partnerships that we are negotiating with government around Omang as well as SIPA to enable our customers to submit their documents, or our consultants in the branches to access documents for our customers without necessarily asking our customers to bring these documents too regularly. And the last stream being diversifying our revenue streams, where the focus in this financial year has primarily been around the insurance business.
Needless to say, the results were quite impressive with an overall bottom line of 13%. The presenters highlighted that the bank's total dividend for the year increased to 16 thebe, with a return on equity of 22.7%. The bank's CEO attributed this to their focus on efficiencies, some of which include operational efficiencies and their continued mandate to ensure customer satisfaction.
It has been a relatively good year for us. I indicated as I was giving my presentation that the focus for us was on efficiencies. So from the efficiencies, which is a strategy that we embarked on for the last 3 years, the benefits of those efficiencies have actually been showing. The growth of our cost base was actually about 5%. The decline in impairments was about 3%, a decline of about 3%. The growth in NIR was about 7%. So all this is as a result of the efficiencies that we embarked on over the last 3 years, and we are beginning to see that playing out in the numbers. So it has relatively been a good year. And as Luke presented, he indicated that the impact to bottom line was a 13% increase year on year in PBT. So we are happy with the performance.
What contributed to this overall growth?
It was a focus on impairments. So if you look at interest income funds, interest income was impacted by the fact that we're currently in a low interest rate environment. So we are unable to extract a lot of value from the balance sheet to the income statement. That's the first thing. The second thing is the consumer is under a lot of pressure. So we are currently operating with consumers that whose incomes depressed, number one, and they've got so many commitments to their incomes, and therefore that has given rise to a lot of non-performing loans as well as impairments. So the focus for us has been on working with our customers around impairments in order to restructure their facilities and to put more focus on collections. And that is very visible in the decline in our impairments by about 3%. Another focus has been on the digital migration story that we have been focusing on, and the value adds that we are giving to our customers, which has resulted in transactions increasing by about 17% and our customer base increasing by 7%. And all in all, that has translated in an increase in NIR, non-interest revenue, by about 7%. The costs, there was a lot of good focus on costs as well, which has resulted in our cost base only increasing by about 5%. So it was efficiencies all over the place in an effort to attain the results that we got, which was a 13% year-on-year increase.
Okay. During your presentation, Mr. Bogatsi, you mentioned Botswana being grey listed as one of the maybe challenges, if you may, that may present the industry. While the Bank of Botswana is working on mitigating measures, how do you think this is affecting the customers, if at all, and what measures do you have in place for that?
Some of the countries that we are dealing with, some of the correspondent banks that we are dealing with, do not differentiate between grey listing and black listing. So for as long as you are not white listed, they will treat you exactly the same. So we have seen that in delays in getting responses from some of our correspondent banks, because once you are grey listed, the enhanced due diligence measures that they have to put in place result in delays in giving us responses on the transactions that we embark on with them. So that directly impacts our customers, because it results in delays in their transactions being fulfilled with our correspondent banks. I am very happy with the progress that both FIA, Bank of Botswana, and all players in the industry are making, including government, are making in resolving this issue. So I think we've been given a timeline, and it appears we are ahead of the timeline. So we should be removed from the grey listing before that timeline approaches us. So I'm satisfied, and I know that my colleagues in the industry as well are satisfied with the progress that the country has made towards resolving the issues that we identified.
You're a bank that is known for a lot of innovations and a lot of changes, trying to, move on with the times. But how, in all of that, are you going to be making sure that customer satisfaction is your primary focus?
In my communication with my team, with teams in the branches and the teams at the head office, teams everywhere, I avoid bombarding them with too many issues that they have to deal with. The simple message for them is, with all the initiatives that we've been putting in place, we now need to test if these initiatives are resulting in a more satisfied customer. So we have what we call an ECSI. It's a customer service index that we measure on an annual basis. And the last one that we measured, our customer satisfaction score was about 79%. And we have given ourselves a big, hairy, audacious goal of 90%. So what I'm saying to staff members is, in every engagement that you have with a customer, make sure that no customer walks out of our door unsatisfied. If you realize that a customer is not satisfied with the response that you've given them, please call them back and engage them until they are satisfied. And engaging a customer does not necessarily mean giving them positive feedback. It means respecting them enough to sit with them knee to knee, eyeball to eyeball, and explaining why the bank has taken a decision that it has taken. So that is what we are driving throughout our communication, that engage your customers and make sure that all customers are satisfied, at least satisfied by the fact that you have engaged them, you have respected them enough to engage them.
FNB Botswana remains committed to its social responsibility to the community, a function the bank performs through the FNB Botswana Foundation. The foundation assists vulnerable groups such as youth who, amongst other things, are plagued with unemployment. Year in and year out, tertiary institutions release graduates into a saturated labor market, leaving well over 90,000 tertiary educated youth roaming the streets unemployed. In trying to deal with their situation, some of these youth resort to delinquent behavior, including crime. Some have fallen into chronic depression or indulging in hard drugs. On this backflip, FNB Botswana has committed to investing up to 1% of each year's profit after tax to the foundation, who then seek out ways to enhance the youth's employability.
A lot of what we have been doing at the FNB Foundation level, projects that, in my view, short-term. And they do not help, they are not sustainable, and they do not help address the greater challenges that the community is facing. So we have sat back as the FNB Foundation and have come to appreciate that the biggest challenge that the country is facing is youth unemployment. So in response to that challenge, we have decided that we're going to focus our efforts, our resources on those activities that will empower the youth, the young people in the country. So most of the activities that you'll begin to see will not be activities around building a house here and there. It'll be opportunities or activities around the sort of things that we can do to address the youth unemployment and youth employment issues. So that is the huge scope change that we embarked on in the last 18 months, which will gain a lot of traction in the next coming months.
We'll be right back shortly with more from the First National Bank Botswana's year-end financial results shortly after the break. Stay tuned.
When running a business means
Where did I put that receipt?
we can help you with instant accounting, free software that does your bookkeeping for you. When running a business means
Wait, what do you mean the container hasn't arrived?
we help protect your business from risk with Mohwebi Insurance. And when it means
How do we pay our staff that don't have bank accounts?
we help you make multiple payments directly to people's phones with e-wallet bulk send.
Wow, man.
At FNB, we're constantly innovating to help business owners at every stage of their journey.
Welcome back to First Issues.
We continue our look into First National Bank Botswana's financial results of the year ended 30 June 2019. The bank saw a 4% growth in deposits, which was driven by increases in call and current account portfolios. Most importantly, the bank's bottom line increased by 13%. FNB Botswana Chief Financial Officer Luke Woodford says this is due to efficient management of all key income and expense drivers. We spoke to Luke after his presentation to members of the media, analysts, board members and other stakeholders to help us unpack the overall financial performance of the bank.
FNB's really had an excellent year. We've had profit after tax growth of 13%, significantly up on the prior year, and it's a balanced set of results this year. Really what's created it is there's been our interest income up by 7%. As we've extended advances into the market, we've grown our retail book, we've grown our corporate book. We've had a bit of a decline in our commercial portfolio there, an intentional decline on some of the counterparties on that part, and we've balanced that off with growth in the lower risk corporate portfolio. We've managed to contain our interest expense line. We've managed our liquidity profile of the bank has remained stable. As we've continued to raise funding in the longer term buckets and allowed the bank to stay in a stable position to really protect the depositors. In addition to that, our bad debt charge for the year was 3% down. We've applied prudent measures throughout that, so we're very well provided when it comes to credit impairments. And then we've seen, as we've managed to grow our total income from operations by 9%, we've seen a cost growth of only 5%. Now that is on the back of growth in the staff cost line as well as in some other additional investments that we've done in the year, offset by some contained costs on technology costs as we've seen efficiencies coming through into our portfolio. So all in all, it rounds off to almost an opening up of the income and then the expenses staying really relatively well contained and printing a 13% growth in our profit after tax.
So maybe talk us through the negatives as well that may have impeded a much bigger growth and the positives of everything.
I think for me, we don't, as a bank, just simply aim for growth. We look to say, let's balance growth with risk, with the volatility we might see in the portfolio, as well as with return on capital. So you'll see in our results, we've also published a 22.7% return on capital, which is in addition to that, we've seen a stabilization of a lot of our portfolios with regards to interest rate risk and managing a number of the credit risk elements that I've spoken to as well. So for me, I don't think we were on the page of trying to necessarily outperform where we have this year. We did see a decline in the commercial portfolio, so the commercial lending portfolio. So we've seen within that broader business, the segment that incorporates SME as well as probably the higher end tier clients in commercial. We've seen an 18% growth in the customer numbers and significant growth in non-interest revenue as the customers are banking with us more as well as deposits. But we've seen a reduction in that advances portfolio. So really two elements playing into this being the repayments. So a lot of the customers were cash flushed during the year and have prepaid their loans. And then we've had some intentional exits where we've had very high risk accounts that we've wanted to move out of as we try and re-risk rate our book. So you see we've had a legacy NPL balance of about 1.15 billion pula. It went up in December to 1.3 billion pula. I know it made headlines then, but part of ensuring that there's not continued pressure in that portfolio is ensuring we write good business.
We conclude our conversation on the First National Bank Botswana's year-end financial results shortly after the break with the bank's CEO. Stay tuned.
When running a business means
Where did I put that receipt?
we can help you with instant accounting, free software that does your bookkeeping for you. When running a business means
Wait, what do you mean the container hasn't arrived?
we help protect your business from risk with Mohwebi Insurance. And when it means
How do we pay our staff that don't have bank accounts?
we help you make multiple payments directly to people's phones with e-wallet bulk send. At FNB, we're constantly innovating to help business owners at every stage of their journey.
Welcome back to First Issues. We conclude our look into the First National Bank Botswana's financial results of the year ended 30 June 2019 that were announced last week. We speak to the bank's CEO, Stephen Bogatsu, about the possible avenues or opportunities of growth that they've identified for the bank.
We are seeing a lot of activity in the mining space, particularly in the construction, mining construction space, opportunities for West Bank. We are seeing some good opportunities in the tourism space. We are seeing some good opportunities in the agriculture space. We know that it appears the predictions or the forecast is that weather patterns will improve for the better. So should that happen, we are waiting to embrace the opportunities that will come as a result of the changing weather patterns. From an SME space, we are also seeing a number of opportunities, and that is why we are gearing ourselves around purchase order financing to support the growth of the SMME. So those are some of the opportunities that we are seeing in the market that we are gearing ourselves to support our customers on.
We've come to the end of tonight's episode. We'll see you again next week with more issues of interest. Until then, keep up with us on our social media platforms. That is on Twitter, on Facebook, and on YouTube. Until next week, good night.
This program was brought to you by First National Bank of Botswana.
FNB, how can we help you?